Good morning, traders and investors. My name is Shen Mwangangi, your best market analyst here at HFM. So, to begin this week, do you have the trade war 2.0 starting once again? We have seen Trump uh, sending some trade tariffs to various countries, including the EU, the Canada, also Mexico, and that was during the weekend. And that has also led for the market to give off some of its profits, especially if you're trading the US 500 and the US 100 and also the US 30. So let us have a look on what is happening in the markets. So I'll start with a recap of what happened during the weekend. So global markets have been in a trust risk-off spiral to begin the week, as the optimism from last week's record-setting equity rally has shattered by renewed and escalated trade war threats from the United States over the weekend. This dramatic shift in sentiment is overshadowing a mixed bag of economic data from late last week and sets a tense backdrop for a week headlined by crucial US inflation and retail sales figures. So also this week we have CPI coming out on Tuesday. That's new. We always expect CPI on a Wednesday. And also we have retail sales figures coming out on Thursday. Also last week, UK GDP came out at a contracting 0.1%, which also is influencing uh, JBP pairs to move down. And we can have a look on the charts. On the daily chart, I can see just by having this daily candle, I can see how we are sharply moving down. Remember, when you have a negative GDP, there's a possibility of rate cut, and rate cut weakens the currencies. So GBP at the moment right now is currently weak, showing us that we are even the chart is showing us that we are currently bearish on JVP. So if you're trading JVP pairs, trade cautiously with bearish momentum on the move, and use good risk managements. Also on the Canadian employment rate, if you're trading USD card, we had 83,000 jobs in June, which was a which was an increase, and also the employment rate increased by 6.9 fell by 6.9%, which reduces the odds for rate cuts for the Canadian dollar. Technically speaking, US indices closed at all-time highs on Friday. On Friday, we had the US indices close at all-time highs, uh, which is a technical picture of bullish momentum on the US. But when we had the news that came out this weekend of the tariffs, remember, tariffs always influences the stock market. And the last time when we had the tariff news, we had that form of downward movement from the all-time highs all the way to 16 to 90. And at the moment, we currently hit all-time highs again. And after the all-time highs came in, the US Trump now decided to push the tariff to different countries, and that's why we have that bearish momentum coming in on US 500 and also US 100. Upcoming today and this week, the key events that we'll have is the US inflation rate. This is a critical data point that will heavily influence the Federal Reserve's thinking on interest rates. So remember, if you have high inflation, there's a possibility of a interest rate hike. If you have low inflation, there's a possibility of interest rate cut. So, and when you have a hike, it strengthens the dollar. If you have a cut, it weakens the dollar. So that will be one of the key events. Also, we have US retail sales coming out on Thursday, which will provide a key reading on the health of the US consumer. Coming on gold, fundamental outlook on gold is poised by a primary beneficiary of the current risk-averse environment. Remember, when you have something like trade tariffs, people tend to sell the they tend to sell the US assets, and they tend to buy gold, which now gold is in a demand. And if I go to the gold, I can see right now gold has been pushing higher currently wanting to test the 33.75. If we break out the 33.75, which we have been in a while in this consolidation range, if we break and close with high momentum and volume, therefore the bullish momentum will continue. But remember, we have CPI coming out tomorrow, which will be also a key decision that will impact the market. Now coming on to our forex pairs, JPP USD, the US dollar. Before I begin with JPP USD, the US dollar is at a critical juncture with a global risk off mode, and this can benefit also the, as I said, gold, which will be a major safe haven. For JPP USD, JPP USD is under significant pressure following Friday's weak JDP report, which came out at a negative 0.1%. We were expecting a 0.1%, but it came out at a negative 0.1%, which is a deviation of negative 0.2, and which brings in the expectation of a likelihood of a rate cut for JPP, and that's why you have that negative pressure on JPP. Coming on to USD CAD, the Canadian dollar received a massive boost. Let me move to USD CAD. It received a massive boost from its blockbuster job reports. However, the new 35% tariff threat from the US is which is its largest trading partner, is a major headwind that could cap the Canadians' gains. Technical outlook: expect high volatility in pairs involving USD, JPP, and CAD, which will be our major focus for this week. And also the dollar will be closely watched. A failure to hold gains could signal a broader dollar downturn. Now moving on lastly to our US indices. As I said, the US indices now is giving off its gains after hitting all-time highs, and right now we are at 62.64 as we continue to move down. Right now we have a sudden sharp sell-off from the opening, erasing a portion of last week's record-setting gains. The new tariff threats directly impact the earnings outlook for multinational corporation and stifles business investments, creating a powerful headwind for equities. Technical outlook: the gap down at the open will be a significant bearish technical event. We have this gap that opened, which shows us that bearish pressure is currently strong, and the key question will be whether buyers step into defense support levels at the 6200 level, with a more significant zone near the 6150 level. Then moving on to oil as I finish up. The outlook for oil is currently bearish at the start of the week. Escalating trade wars, because of escalating trade wars, which will threaten a slow economic growth for the dollar. And if you have a slow economic growth for the dollar, it will directly impact the US oil, because slow economic growth for the dollar also bearish pressure on oil. So we'll have also a key major decision tomorrow as on the CPI. If CPI comes out better than expected, also oil will slightly move upwards, not majorly but slightly move upwards. And if CPI comes out negative, that's a bearish momentum on oil. So with that said, we have looked on our dollar, on our gold, on our US 500, US 100, JVP USD, and also oil. So make sure that as you move on to the charts, make sure you also do your key analysis based on how you do your technical analysis, and also make sure that you use good risk management and have a proper mindset when maneuvering the markets. With that said, my name is Shen Mongangi, your best market analyst here at HFM. So, and for those joining us for our classes, we'll be having classes from 11 a.m. all the way to 12:30, and also our online classes from 4 p.m. all the way to 5:30. And also don't forget to trade gold. We have our key event that is happening, which is called Trade Gold Drive Bold. The question is, will you be the one who is going to win the Mercedes C200 2025? That's it. Goodbye and see you tomorrow, same time, same place. Goodbye.
This is your moment. Win a 2025 Mercedes C-Class. Explore the markets with a top-tier trading setup. 10 chances to grab the latest iPhone. Trade and earn points for the lucky draws. This is Africa's time to shine. Join the action now and trade your way to glory.